Welcome back to FT Markets. Well, the Swiss National Bank has absolutely dropped a bombshell today in the global currency markets. Joining me now to discuss what is happening here, I'm joined by Izabella Kaminska from FT Alphaville. Izzy, potentially an historic day for currency moves.
I mean, certainly no one saw it coming, and you know, there's a famous quote used by Orson Welles in the film The Third Man. It comes to mind.
Harry Lime.
Yeah, it goes in 500 years of democracy, what the Swiss have ever done for us. Produced a cuckoo clock, and I think we can add like extraordinary FX moves to that now as well.
Yes, we can. I mean, it really has echoes of what we saw in the 1980s when we had the famous Plaza Agreement, where G7 came together and decided to really weaken the dollar. And I can remember sort of tales from the trenches back from sort of old times in the FX market that this was incredible volatility. And today we've seen 27% gains in the Swiss franc against both the euro and the dollar, and pretty much occurred within a matter of minutes. What is driving it? Well, why is the reaction so big? And do you think the Swiss National Bank was expecting this kind of market reaction?
To be honest, I think clearly they underestimated how the markets would react. I don't think they would have been expecting this sort of move. And two things come to mind. First, perhaps it really was that much more undervalued than they appreciated. But since coming here, it's already gone up to, it's fallen back down to only a 13% move. So it's been very, very volatile. So perhaps it's not even the size of the move in many ways perhaps reflects no liquidity in the market. There might be other factors as well, and that might have caught the SNB off guard. Right.
I mean, sort of looking across the sort of universal players here, in particularly in the currency markets, I mean, do you think there's a strong likelihood that macro hedge funds have been caught offside here, other big players, people who've borrowed in Swiss francs? What's your sort of sense here of the potential collateral damage?
The collateral damage is going to be potentially huge, and we need to see where the day ends, because it might just be a little bit of like the market might be finding its feet. But even so, I mean, in a few minutes, people can't carry those sorts of moves. I mean, margin calls are going to be going off all over the world, you know, so it's very much like, you know, a butterfly or a cuckoo clock flapping its wings in Switzerland. Yep. God knows where the hurricanes end up in the end. But also, you know, in terms of like the Swiss economy itself has had a relatively large real estate correction. There's been a lot of, you know, it's not been all good news. Even though they have been very carefully trying to manage the economy, the real estate sector there is not performing very well. And then, you know, Davos is this week. It's just on a very micro level. It'll be more expensive to buy coffees
yes,
if you don't come from Switzerland.
Now, finally, the other big talking point at the moment, of course, is whether the ECB would do QE. It would seem from this move by the Swiss National Bank, they're expecting something pretty big from the ECB next week. Do you concur?
Yeah, I mean, it certainly looks like this is a preemptive move. It looks like they appreciate that the dynamics in the markets are changing. The Fed has changed its policy. It's no longer perhaps possible or in any way makes sense to maintain the levels that were there before with the floor that they had. And also with the ECB coming in, you've got to remember there's going to be a big buy of last resort for all the ECB assets that have previously been on the SNB books.
Great. Well, thanks so much, Izzy. I suppose if you're an FX trader, you either made your year today, or you're feeling a bit like Harry Lime in the Third Man, not a happy person at all. So, for more on this story, please come to ft.com markets, and we will see you next time.